not one major, what we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch, not one has put Bitcoin on its platform yet, a Bitcoin ETF. They're all doing their due diligence. And I think what's going to happen is within the next few months, one will, and it may be not the big ones, it may be an independent RIA like LPL. They tend to move a little more quickly. Once you get one with a spot Bitcoin ETF on its platform, the others will fall in line pretty.
In a recent discussion with Peter Diamandis, Kathy discusses her outlook on the ETFs going forward, denouncing the rapidly spreading pessimism about their recent performance and the ongoing crypto bull market. Kathy believes we are about halfway through the 2024 and 2025 cryptocurrency bull market, and possibly only weeks away from certain events that would see Bitcoin and other cryptocurrencies hit crazy new highs. The first is one or two major national wirehouses like Morgan Stanley and UBS listing the Bitcoin ETFs. Kathy firmly believes this will happen before the end of 2024, and it will have an instantaneous impact on Bitcoin's price. During her interview with Diamandis, Kathy also discusses her $1 million price prediction for Bitcoin and the next phase for the ETFs.
So we have 4 people at ARK who are working on crypto generally, one dedicated to Bitcoin on-chain analytics. And judging by those, we believe, halfway through this bull market. And halfway doesn't mean we're halfway through the price increase, because, at the end of a bull market, prices tend to go parabolic. So we have no idea where that, but we feel very strongly, just based on-chain analytics, looking at them versus the short 10-year history, a little bit more than that history, that we're halfway through the bull market. What's very interesting, since the ETFs were launched in January, many people think, all right, the boom, and we've had a very nice showing, David versus Goliath. We're in the fight, and very
Congratulations.
happy where we are. Yeah, but not one major. What we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch, not one has put Bitcoin on its platform yet.
Kathy, when you were on stage with me at Abundance 360 last, you were saying you saw $1 million per coin price. Are you still there?
Yes, 2030. So our bull case, bull is over 1.5 million. Our base is in the $650,000 range, so about tenfold from here by 2030. And there are 3 big building blocks. Institutional is one, and I would put it sounds like retail distribution, but these are institutional decision makers at B of A, Merrill Lynch, and so forth. So that's one. The second is, this is a replacement for gold. So we assume that it's going to subsume 50% of the gold, what would be the gold market, especially as younger people are looking to diversify. And then it is an insurance policy. In emerging markets, I just visited El Salvador and had the pleasure of meeting the top officials there, and they are blazing a trail, making it legal tender, and giving their populations, or showing the way for other countries, give their.
What a brilliant move!
Yes, it is a brilliant. There are two.
What a brilliant move!
President Bukele is going after two big ideas, and we're talking about them: AI and Bitcoin. And my mentor and friend, Art Laffer, who joined me on this trip, I think is going to be working with that government. It's only a $30 billion economy. Can you believe that?
Wow.
And here we're
crazy.
talking And they're being very progressive. They're putting in tax policies that are going to encourage innovation. So I think that's a very big idea.
Yeah.
Argentina is moving in this direction. We've talked to the economics ministers there. They're not ready to go the Bitcoin route in the way that President Bukele is, but they're moving in that direction. They're thinking about it. And then the other insurance policy is for anyone, and in high net worth individuals, but anyone, as a protection against confiscation of wealth, whether that's inflation or outright confiscation because of corruption.
During a recent interview, Bloomberg Intelligence ETF analyst James Seyfarth said, "Many of the largest wealth platforms, wirehouses, and advisor networks haven't fully approved the Bitcoin ETFs. In most cases, the only way those advisors or brokers are currently allowed to buy a Bitcoin ETF for their clients is after a client specifically requests it." James added that he expects the situation to change significantly by the end of the year, allowing more advisors to offer spot Bitcoin ETFs to the clients. Kathy agrees with this, stressing that the first announcement is expected between now and October, representing 6 to 9 months after the products started trading in January. Here are more clips from the interview.
Yeah, we tend not to do 1 year, but if we're in the middle of the bull market, I think the next spur is going to be the platforms putting the spot Bitcoin ETF on it. So, and I do think that will happen this year. We were told by some of our prospective clients, the platforms themselves, that they would need 6 to 9 months to evaluate it. So here we are entering the 6th month. So I would expect in the fall, one or more will put the spot Bitcoin ETF, or many of them, on their platforms. And I think that will be the next swoosh then. I think it was the last halving. Many people, we went through the halving and everybody waited for a pop, and it didn't happen. Well, first of all, it didn't happen because there's a lot of anticipatory buying into it. But I've watched it kind of, gestate, shall we say, and then all of a sudden. So those two could coincide in the 4th quarter of this year. It could be pretty exciting. And someone like Art Laffer, who he couldn't be more excited about Bitcoin, because for him, he really believes that, the Fed, many people feel that they have managed monetary policy over the years. So, we've prevented terrible things from happening. If you look what happened before the Fed came about in 1913, what happened then is prices were stable. We're on the gold standard. And the economy was very volatile, and you ran into booms and busts, but they were very quick. They were over in weeks. We lead up for years to a crash. In 08, 09, poster child for that. And here we are again. We had 0 interest rates. And, I wonder what the fallout from private equity, private credit, putting enormous sums into real estate and then leveraging it up. We're starting to see the fallout, whether offices
and the post-COVID, right, with the office exodus,
and multifamily now,
Yeah.
even in the areas where there's been large in-migration. So the Sun Belt, we're beginning to see multifamily in excess. So we'll continue to see crises, I think. Hopefully nothing like 08, 09. I don't think so. But still, 0% for a very long period of time leads to reaching for yield, which leads to bad behavior.